This is Tampa Bay's Fan Talk.
It's time for FLA Law, brought to you by the personal injury attorneys of Perenich, Caulfield, Avril Noyes. This hour will be informative, along with taking your questions and comments. Now, here are your hosts for today's show.
Good evening. It is Tuesday evening at 5 o'clock, and that means that you are here for another edition of FLA Law on the radio. My name is Matthew Noyes, and I'm the host of tonight's show. Put on for you by the law firm of Perenich, Caulfield, Avril Noyes, personal injury law firm here in Tampa Bay. In fact, the oldest personal injury law firm here in Tampa Bay. This year, we are celebrating our 70th anniversary. Yes, we have been helping people since 1955, and we are going strong now because of our dedication to our clients and to our community. And really, this show is an opportunity to give back to the community, to answer questions that you may have regarding the law and other areas that we think may be of interest to you. And so if you have a question regarding the law, it's the telephone number is 727-441-3000. You can call me with the questions of the law, but I have a special guest today. Typically, we've had attorneys come on, but today we have something even special. I kept getting all these things in the mail about tax documents enclosed, please save. So I thought, well, gosh, what's better than to have a tax expert come in to answer questions that you may have regarding preparing for your taxes. So I have my friend, Emsed Ibrahimovic, here to answer the questions that you have regarding the tax. He's not an attorney, but he has been doing taxes for, many years. And Emsed, why don't you introduce yourself to our listeners and tell them about your company?
Well, my name is Emsed. I was born in Bosnia, moved to Germany when I was 12 years old, and then luckily I moved to the U.S., which was the best move I ever did in 1997. Finished my schooling here and started the tax business. And in my place, Taxes by Schmitzer, we care about clients, treat them like family, and we offer personal services, flexible appointments, fair pricing, and free consultation. And of course, we always guarantee your satisfaction and accuracy of the work we do.
Yeah, Emsed, you've been, I've known your family. We were just talking about it off air for, probably 30 years now.
Almost 30 years, exactly.
It's been, you got a wonderful family, great brothers, great parents as well. But you also have a lovely wife and 3 daughters, right?
I have to correct you. I have 4 daughters.
4 daughters. Okay, that's how long it's been. All right. Well, that's wonderful. And this is kind of a family business. You've had, I know when I've come into your office, you've had, I think it was your niece or somebody working the front desk.
Yeah, I have my niece, my 2 older daughters. They work for me also. And keep it in the family.
That's the way to do it. That's really good. So Emsed's here to answer questions that you have regarding filing taxes, whether it's personal income taxes or even business income taxes. Emsed has been doing it. How long have you been doing it?
I started in 2002, worked for somebody, and then did it for 2 years. And I said, hey, why don't I try it on my own? So I've been doing it since 2004.
Wow, by yourself? But
by myself, yeah. Opened up my own practice in 2004 and been doing it ever since.
Over 23 years now.
Well,
23 or 22 tax seasons, and you don't even have any gray hair yet. How do you
23
do that?
More and I can retire. I have 4 kids to put through school.
I don't know, how old is your youngest?
She's 8.
Okay, yeah, you got more than 22 years before you can retire, especially if you have 4 weddings that you have to pay for. I only have 1 daughter, and so.
Well, in my country where I come from, usually the father of the bride doesn't pay for weddings, so I'll try to stick to it.
Well, that's pretty good. Well, good. I know we're going to talk about tax preparation and such, but why don't you tell us a little bit more? I know your company does more than just preparing taxes. You're busy all year round. It's not just between January and April 15th. What other areas do you help people with in relation to the tax services?
Well, we provide, obviously, one of the biggest things is tax planning. It's not just sit down and, do 5 minutes tax return, go home, and that's it. So we sit down with our clients, preferably 3 to 4 times a year, and come up with a plan. Hey, why don't we, if you, let's say, for example, owe a lot of money, why don't you go get that machine that you may need in your business, or get that vehicle that you can depreciate, and not just, and then we also do bookkeeping. We do payroll for clients, and we represent them if needed to.
Right. You help not just individuals, you also help businesses with their tax planning.
Exactly. Yeah. The mainly is the businesses that I help out with the tax planning. Individuals, they usually have a W-2 and they don't have too much really going on. But businesses is where it's more of my help is needed. I would sit down and go over, everybody's individual expenses, income.
So as a business owner, what flaws do you see that people just aren't doing if you had an opportunity to talk to this small business owner, what would you recommend that they do that you see other people not doing?
Keep track of their expenses. That's one of my biggest things. Usually self-employed people, especially doing it from home, it's like, oh, okay, yeah, I'll just go with the flow. And then at the end of the year, hey, they have a shoebox of receipts, and then they have a million receipts that they threw away. So everybody, I'm stressing, keep your receipts, keep your bank statements, do it. If nothing, do it on a monthly basis. I prefer to do it weekly. It's still fresh in your mind, you know what you spend. But if not, do it monthly. Don't get lazy, because every receipt you forget, and you will at the end lose money.
Right, because if you don't have the receipt, you can't write it off, and so you're paying taxes on money that you otherwise wouldn't have to be paying taxes on.
Exactly, and when it comes to IRS, it's you don't prove. If you cannot prove what you put in your taxes, they just take it off. Basically, you can put $5,000 for advertising, but you only have receipts for $3,500. Guess what's going to happen? The $1,500, you're going to have to eat it. But you did spend it, so why not keep good track of your expenses?
So it makes sense. Don't do it at the end of the year. Do it on a weekly basis. Best of all, to do it on a weekly basis.
I recommend all my clients do it on a weekly basis. It's still fresh. You can go back. We all getting older, and the technology is there. Use the technology. Put it in like QuickBooks. You can get free sample of QuickBooks if nothing else, and just put it in weekly, daily, and it's gonna add for yourself. You don't have to do any math. I know people hate when you tell them taxes, math. I hate it. You don't have to do it. The computer is going to do it for you.
That's good, yeah. But you are a math guy. I know your daughter's a math. At least one of your daughters is a math girl too, right?
Yeah, actually, I hate to say it, but all 4 of them are really good in math.
That's
great.
It
looks like they're much better than I am.
That's great. Well, I think one of them's close to 18. I have a son who needs a math tutor, so that'd be wonderful.
She's 19, by the way.
Yes. Yeah. Well, I guess my son's 19 too. So that's perfect. So maybe I can get a math tutor.
You never know. You never know.
Well, you listen to MSED. This is Matt Noyes. This is FLA Law on the radio. We are just 2 guys here giving up an hour of our time to talk to you and to be able to answer questions that you have. I can answer questions regarding the law. We do personal injury. That's car accidents, slip and falls, trip and falls, work injuries, and Social Security disability as well. And MSED's here as well, and he can answer questions you have regarding the taxes. It's tax season, and so typically I don't see MSED from January till I think probably May, because you go past the April 15th deadline date.
Yeah, unfortunately, there is a lot of people that just put it off last minute, and then they forget to file it. And I hate when I have to file extensions, which means I have to work past April 15th.
Well, that's great. So if you have questions, this is the time to give us a call. The number is 727-441-3000. But I also forgot to mention at the top of the show that we are also live on Facebook. So on our firm's Facebook page, Perenich, Caulfield, Avril Noyes, Injury Lawyers. Perenich is spelled Perenich. And we're live. And so if you don't want your question asked on the radio, you can just type into your question right on Facebook, and Emsed and I can answer that question for you just looking at Facebook live. So 2 ways to get answers: 727-441-3000 or Facebook Live at Perenich, Caulfield, Avril, and Noyes Injury Lawyers. So Emsed, before we take a call, I mean, there are some requirements of who is supposed to file a federal income tax return. Can you tell our listeners who has to file income tax return?
Well, every individual that makes over $14,600.
$14,600. Okay.
Individual married couple is $29,200. And the reason you want to file, even if you don't make the $14,600, 100% you're going to get all the money back that you paid in, and possibly you can get a little bit extra earned income credit, but that's if your income is below the $14,600. It's not required to file if your income is below, but I recommend everybody to file.
Well, I could imagine the IRS wouldn't want you to file because they're not going to send you your federal withholding if you don't file.
And that's exactly what happens a lot. People just think, oh, I didn't make the threshold, so I'm not even going to file. I'm not going to get any money back. And guess what happens? Most of the time, you do get at least something back. And the time frame to claim that money is 3 years. So if you don't claim it within the 3 years, you say goodbye.
Okay. But even if you finally talk to somebody like you and they say, well, how come you haven't filed your taxes in the last 2 years? You can go back and file it and recoup the federal withholding, your return money?
Yes, you can go back 3 years and file it and get the money back. But if you fail to do it within the 3 year period, that's it. Out of luck. Can't claim
gave them a loan that's not being paid back.
Exactly. Interest free, which everybody loves, especially the big three, IRS. They love free money.
And that kind of brings me to something that I've seen a lot. People are often very happy when they get a big return. And I always thought, well, gosh, I wouldn't want to be happy for a big return because you don't get interest on that money. And so in essence, you gave the IRS a free loan with no interest for that whole year period. Am I correct in that thought?
You are absolutely correct, but there is 2 factors to it. One of them, you just overpay, which obviously you need to sit down and figure out what tax bracket you're in and how much you need to contribute. So that way, the IRS will give you back the money that you overpay, but like you said, interest free. And then there is another factor to it, which a lot of people are happy. Or they walk out of my office, they're jumping, and they're happy they get a huge refund. Usually, those refunds I'm not really happy with. That means your income is very low, and then you get what's called earned income credit. And a lot of people, unfortunately, they have a chance to work overtime to make money during the year, but they're choosing not to because they want to get the huge refund. And guess what happens with the huge refund? You spend it within a week.
Yeah.
And then the whole year, you're missing out on money that's ready on the table. You leave it to get the extra $2,000 or $3,000 during tax season, which is not really going to help you.
Right. Now, I know we can talk a whole hour on earned income, but can you give it in a nutshell what that is and how people can do that?
Well, the earned income credit is obviously if you make first of all, if you have kids, the earned income credit is the biggest, obviously. But then your income needs to be low. For example, if you have 1 kid, you can get earned income credit, and it's always up to, which I tell all my people, the earned income is up to, not necessarily. They'll go online and they'll see, oh, I have 3 kids, I get $7,830 on the dot. No. That's not the case.
Oh, so it's up to, so you can have less than that.
Exactly. It's up to, but it all depends what your income is and how many dependents you're claiming. And earned income credit, you can get it even without kids, but obviously it's a lot less than when you do have kids.
Okay, that makes sense. That's something that if people just do it on their own, they just file their taxes on their own, they may not know anything about that.
Well, I don't really recommend doing it yourself. I mean, it is kind of pricey to get your taxes done professionally, but also at the same time, it's done right. It takes the headache away. And then we look for a lot of things that people overlook. Online, it's like, hey, you go in there, question 1, 2, 3, 4, you're done, you get a refund or not. But there is so much more to it.
It doesn't ask any questions, really.
No, they don't go into detail. And obviously, they're in there, just do it quick, do it simple, get done. So not in my firm. We sit down. I meet with my customers mostly face-to-face. We go over everything. I sometimes ask questions that I shouldn't even be asking, but I want to find out, what can I do for you? Are we leaving anything on the table, or are we doing the right thing? And
that's the personal approach. That's the way to do it. The more information you know, the better opportunities it is to find out what tax advice you can give them.
Well, and I tell everybody, I'll just do what the government allows us to do, and been doing this, like I said, 23 years. Thanks God, I have not had one audit yet. I hope it stays that way.
I'll knock right now. So, no, that's great. And you say it's pricey, but your prices are on your website.
Exactly. I price my...
and they're not pricey.
Exactly. People think, hey, oh my God, I'll go get my taxes done professionally. It's going to cost me an arm and a leg. Well, there is some big companies out there. They will take your arm, leg, your hips, whatever. But we try to stay very competitive. My prices are on my website. It's very reasonable. And in matter of fact, I have not done any advertising ever. All of my customers are repeat customers. And now I have their kids coming back.
Wow.
And it's all word of mouth. I don't even have business card, believe it or not.
Wow. But where's your office at?
My office is in Clearwater on 2062 Northeast Coachman Road.
And that's like that little turnaround on Drew and Coachman, right?
That's exactly where a lot of accidents happen. Yes.
Yeah. Well, I know everybody knows all about the filing deadline of April 15th. Is that the only deadline there is?
No.
Okay. What other deadlines should our listeners know about?
Corporate taxes are usually, if you have a business in corporate taxes, March 15th is your deadline.
Okay.
But you can file an extension. It's very easy. You file an extension. Now, personal taxes is April 15th. Sometimes they'll have April 17th if
depending on what day of the week it falls on, right?
Exactly. But then you can also get an extension on filing the personal taxes at all.
How do you do that?
You file a form and they give you automatic 6-month extension, but that's just to file. But if you owe money to the IRS, you better pay it by the 15th, because after the 15th, you're gonna pay interest, and it's compound daily interest.
Oh my goodness! So if you know you're gonna have to pay taxes, but you don't have time to figure out exactly how much, because you procrastinated till April 15th, it's best to make a payment.
It's best to make a payment as much as you can. Obviously, if you overpay, they'll give it back to you.
Right.
But if you end up owing more than you paid, then you'll just pay the interest on the difference that you didn't pay. It's much easier than paying interest on the whole thing. And especially with the IRS, it's compound interest and it's daily and it piles up quickly.
Wow. Yeah, so it is better to do it on April 15th if you can get it done.
If you can get it done, I stay till midnight, April 15th. I'm like, I don't go to sleep. Just get it done. Send it in. At least something. Send it in.
Sooner the better. All right.
Well, there is a lot of scams going on, a lot of fraud. And I tell everybody, your information is not safe out there. You should definitely try file as quick as you can. The sooner the better, pretty much.
Okay. Yeah. Well, I mean, you jump online, you see all kinds of advertisements and potential scams out there, emails that say, hey, let us do your taxes for you. Give us your social security number and we can get it going. That's just begging for problems, right? Oh, that's a huge problem we're facing right now. And not only that, there's people calling on the phone, pretending to be the IRS. And they're like, oh, by the way, you filed such and such. If you don't pay, and then they want you to go and send them Western Union and send them all kinds of payments. So I tell my clients, IRS will never call you on the phone unless you have an arrangement with them. They will never send you an email.
IRS, most of the time, 99.9% will send you mail and then you respond to it.
Right. So if you're getting something that says the IRS, an email from the IRS as a first contact, or a telephone call from quote unquote the IRS, you know it's a scam.
It's 100% scam. IRS will never email you. If you get an email, the best thing is don't even open it.
Okay.
Just delete it. If you get a phone call, hang up. That's your best protection you have.
Because most of the time, and one of the first information that the IRS would want, if it would be your social security number and your date of birth. And as soon as you give that information away to some crook, you're just in trouble. Right.
And you're not just in trouble for 1 year. Once they get in, then you're like in trouble for many, many years.
Oh, yes.
And I recommend my clients, there is a thing that IRS has. It's an IP pin. The best thing to protect yourself, obviously, is you don't go on crazy websites, don't open up emails that you shouldn't be. But the biggest protection is, and it's free. Go to irs.gov and get that pin.
What's it called?
IP pin.
IP pin. Okay.
So basically, you're the only person that has access to it. Nobody else knows it. So when you're filing your taxes, and if whatever you do, in order to file electronically, you're going to have to put that pin in there.
Okay.
So if somebody steals your identity, they try to file a fake or fraudulent tax return, they can go ahead and do it. But once they file it, well, no pin, no return.
That's helpful. Yeah, that's very good to know. Well, we're talking about gathering and trying to file your income tax return as early as possible so you can get it taken care of and not have to do that extension. But what documents or forms do you need? I mean, I'm sure you write a letter to your past clients and say, hey, please make sure you bring X, Y, and Z, and it's probably a pretty long list. But in general, what should our listeners really bring in to their tax preparer?
Well, in general, obviously, most of clients, bring their W-2s, 1099s, investment statements, receipts, deductions. If they have kids, tell them to bring kids' social security cards, proof of address, which is a big thing because that's what a lot of the fraudulent people don't really have proof of address. They don't have copies of social security cards. Those are big things, but mainly W-2s and 1099s and all investments that you might have, even selling cryptos.
Yeah, I heard that's something big now too, right?
That you will get a form. Don't file your taxes without it because it's asking you right there, did you sell any cryptos? And yes, you will get a form if you buy or sell.
Wow. Okay. Yeah, that's something that you could easily overlook,
And especially it's something that's relatively brand new to the industry. And a lot of people hear or they read or their friends might have told them or they found on Facebook or YouTube, don't report it. But no, it is a requirement. You report it. Basically, it's just like any other stock. Report what you paid for and what you sold it for and pay the difference.
Yeah, and you need your bank statements as well, right?
Definitely. Sure. Bank statements and canceled checks is definitely and that's the only way to prove your expenses and deductions.
Right. That makes sense. And so we're talking about deductions and such like that. I know people often ask, should I itemize my deductions or should I just take the standard deduction? What's the difference in what scenario should someone take the standard as opposed to the itemized?
Well, the standard deduction for a single filer this year we're talking about 2024 tax year, is $14,600. Married, obviously, $29,200. You get that automatically. But if you have interest in your house, that's a lot of money. Or you pay your taxes, or you pay personal taxes, or hey, you might have gotten sick. You paid a lot of money in medical bills, or you had charitable contributions. Then we sit down and we put all the numbers in it. And if it makes sense, hey, instead of $29,200, we ended up having $36,000 in itemized deductions. So we'll itemize and we'll go with that approach instead of just taking the standard deduction. I always go the long form to find out if people have overlooked something. Maybe they qualify for more than the standard deduction. So we practice always to do the long form. And for some reason, it's less than the standard deduction.
Then you just take the standard.
Take the standard automatic and be done.
Well, I think that's why it's so important for people to talk with people like you, before they just do their taxes online. I know the IRS has a free website that you can do your taxes, but they're never going to ask those questions that you asked them going over that long form to see whether or not a standard deduction is the right way to go or the itemized deduction's way to go.
Well, I mean, this world, there's nothing for free. And if you hear usually the word free, you run. It's like, what's the catch? So the IRS wants you to do do it online, quick,
easy form or whatever that is.
Easy form, punch your name and social security number, and it is what it is. They don't ask you all these questions. That's why always it's worth to see a professional. You're going to end up, at least it's done right, and you always are going to overlook something that a professional is going to find.
Right. And you're listening to a professional right now. EMSA's been doing tax filings, for 24 years, or 23, 24 years. And so he is here tonight to answer any questions that you have. So give us a call at 727-441-3000. Oftentimes on the radio, they wait right before 6 o'clock to call, and then we have to take the calls off the air instead of being able to answer the questions. And no question's a dumb question. I mean, somebody listening to the radio may have the same question you have, and just doesn't want to ask. And so it's important that if you have a question, give us a call at 727-441-3000. Or you can get on our live Facebook page at Perenich, Caulfield, Avril Noyes Injury Lawyers, and you can type in your question there as well. We are here for you until 6 o'clock. I am Matthew Noyes with the law firm of Perenich, Caulfield, Avril Noyes, the oldest personal injury law firm in Tampa Bay. We've been helping people after car accidents since 1955. So we are celebrating year 70 this year. So we are proud to do that. We are proud to be part of the Tampa Bay community. Guy Perenich started our firm, down 70 years ago in downtown Clearwater, and we've been helping people ever since. So, okay. It does look like we do have a call. Ed, thank you for listening and thank you for calling. How can we help you?
Hey, listen. So I just got Medicare in October, the end of October. So do I have to wait to get my money market, or what do you call this?
1095A form.
1095, yeah.
Yes,
definitely. I have to wait till I get that back before I file.
Yes, definitely. In matter of fact, okay. I stress that out a lot because if you file without it, you're gonna get a rejection note, and then you have to go back in there and file it.
I know. I got that last year. Screwed me all up.
And if you don't get it for some reason, there is a form that you can go and download. It's called 1095A, and you can call.
I'll do it.
Yeah.
I'll do it.
And you can call, and they'll give you the numbers right on the phone, and you don't have to wait for the form. Because what happens, IRS already has the form, and if your numbers match their numbers, you go ahead and file it. You don't have to wait for the form.
All right, my friend.
Okay. Thank you for calling. Thank you for listening. Now,
no problem.
Thank you.
What is it? 1095 form?
1095A is a form. It's the insurance. Still call it Obamacare insurance.
Okay.
That people get, and you get supplemental payments from the government. So let's say, for example, your insurance is $800 a month. Your income is not really high enough. Then the government will come in and say, hey, we'll pay $650 of that, and you only pay $150.
Okay.
So at the end of the year, that's also based on your income. Now, if you tell them, hey, my income is $30,000 a year, your premium is going to be so much. But at the end of the year, hey, if your income is $50,000 instead of 30, well, you are going to pay a lot more than you really paid. So there is a huge difference of at the end of the year. I've seen people owing $3,000, $4,000, even $5,000 because they underestimated their income.
Oh, wow.
And you cannot file your taxes without that form.
Oh, okay. At least the figures for that form.
Yes, exactly. And if you tell them my income is 30 at the end of the year, your income is $30,000, you don't have to worry about it at all. Nothing. Or if you tell them, hey, my estimated income is 30 and at the end of the year you only made 20, they will pay you the difference back.
Okay.
Yeah, it's not just you pay them. So if your income is less than, which means we're paying higher premium than you should have been, you get a refund.
Okay. Now, other health insurance, not Obamacare, but other health insurance premiums. Is there a deduction for that?
Only if you're self-employed.
Okay. So
you can write it off.
All right. So if it's a family that has health insurance through the husband or the wife's job, that's not deductible.
But that's also pre-tax, which means you don't pay taxes on it either.
Okay.
So it's pretty much the same thing. It's pre-tax in your W-2s if you work for an employer, or if you're self-employed, you can write it off.
And pre-tax, I know what it means, but for our listeners, that means that the government doesn't consider that income or that payment as your income?
Exactly. I'll give you an example. If you make $50,000 a year and you pay $5,000 in insurance premiums, well, your W-2 is going to save $45,000 instead of $50,000.
Oh, okay. Yeah. And so you're only getting taxed on the $45,000.
Exactly. You don't get taxed on the insurance, health insurance.
Now, I know that the tax brackets vary regularly. I don't know if I want to put you on the spot or not, but what's the lowest tax bracket there is and what's the highest right now for 2024?
Well, 10% is the lowest, obviously, and 37 is the highest.
Okay.
Which is a chunk.
Yeah, but if you're under 14,000, then it's zero.
Exactly.
Zero, so.
Yep. So under 14,600, you are pretty much at zero.
Okay.
Anything over that is 10%.
And the highest was
37.
Wow.
Well, and if you're self-employed, then you have 15.3% on top of it.
15.3?
15.3.
Wow. Okay.
Yeah.
Wow. And then there's capital gains tax too, what's in the news all the time.
Well, capital gains, it's a very funny one. And the self-employment is 15.3, which 12.4% of it goes to Social Security, 2.9 goes towards Medicare. And the only reason it's 15.3 is because you pay for everything. Versus if you work for somebody and you get a regular W-2, your employer pays for half and you pay the half.
All right.
So that's the disadvantage of owning your own business.
Yeah. Now, we talked beforehand about owning your own business and utilizing retirement funds for tax planning and such like that. What do you mean by that?
Well, there is a lot of things to utilize for self-employed people. And what I'm finding out is that not too many people really know about the advantages they have being self-employed and offsetting and not basically giving the money that you shouldn't be. There is one thing that I stress out a lot. It's called SEP IRA.
SEP?
SEP, S-E-P IRA.
Okay.
And that's for large companies. And obviously you have to be self-employed or you have to be a corporation. I'll give you an example. If after all the expenses, you have a compensation of $345,000, you can contribute up to 25%, which is $69,000 for 24 and $70,000 for 25. You can contribute that towards an SEP IRA, and guess what? That money will go into a fund where basically you don't pay taxes on the $69,000.
And for let's say you did it for 2024, you don't pay taxes on the $64,000.
What happens is $64,000 gets put obviously in a trustee. Usually it's a bank or mutual funds, insurance
kind of like
companies.
an RA, but not an IRA.
Exactly.
Okay.
IRA, you can contribute, but it's a lot less. For example, a traditional IRA is up to $8,000. You can contribute into Roth IRA, but not as much. Whereas this SEP is a lot of money, and then you don't have to do it every year. If you have a good year, put all 60. You can put up to 25%. You can put 10,000, 15, 20, and then obviously when you retire, you take out portions of it. And obviously you're going to
you pay taxes on once you have it distributed to you.
Exactly. And once you're retired, which means you don't have that big income, so you're going to be in a lot less tax bracket, a lot lower tax bracket than you are in currently right now.
No, that makes sense.
And that's something I, sit down. I just don't prepare taxes. I sit down with my clients, and especially the ones that, start making some money. We sit down, we make a plan actually, and go try to see where we can benefit in saving a lot of money.
Right. You want, and knowing you want to make sure that you do everything you're required to do.
Exactly.
But don't give the IRS any free money. If there is a deduction or there's a way to plan accordingly, that people are turning to you to get that guidance.
That's the whole thing. It's planning. And that's why I cannot stress enough my clients. We need to get together at least quarterly, and then we can plan. If you don't plan, you're going to lose out. And I hate the word free. I don't even give anything free to my own kids.
Yeah.
So why give the IRS free money if you don't have to? If you have to, that's a different story.
Right. You listen to Amsed Ibrahimovic. I'm going to have him say the name of his company again because I always pronounce it incorrectly. So, Amsed, how do you pronounce the name of your company again?
Taxes by Schmetzo.
Schmetzo.
You did good.
Schmetzo.
Schmetzo. Yeah, you did really good.
It's spelled SMECO. So this Chicago boy would say Semco.
Well, I've heard it all. So.
Oh goodness. Yes, and so we are here for another 15, 20 minutes. So if you have questions regarding tax planning, filing taxes, MSED's here for you. If you have questions regarding personal injury, I'm here for you, Matt Noyes, so one of the partners at the law firm of Perenich, Caulfield, Avril Noyes. So give us a call at 727-441-3000. So MSED, one of the questions that I hear a lot in my practice is, okay, I just made a settlement on my auto accident case. Do I have to pay taxes on my settlement amount?
Well, the settlement amount for the accident is not taxable.
Okay.
At all. So I cannot stress that enough to my clients when they come to me and say, oh my God, what am I going to do? I have $20,000, $30,000, $40,000, $50,000. Somebody told me I have to pay taxes on it. What do I do? If it's a car accident, obviously that money is tax-free.
That's tax-free, especially because we don't break it down as lost wages, future medical bills, pain and suffering. It's not broken down. So if it's not broken down, it should be tax-free.
It is absolutely tax-free.
Because it's not deemed wages.
Exactly.
It's compensation for your injury.
Exactly. And injuries are never taxable. Right. And you know it, you the injury attorney.
I know, but I always say, I'm not a tax guy, so you have to consult with your tax guy. But I do know that answer is that in most situations, it's tax-free. Now, if it's punitive damages or something like that, it's a whole other story.
That's a whole other story, yeah.
If there's interest earned on the settlement amount, that interest is deemed income.
Exactly.
But just not
just the main core
base,
of the base. Yeah, that's not taxable.
Okay.
Yeah.
What about workers' compensation? I have a lot of clients that get checks for workers' comp because they're out of work and not getting their wages, but they're getting workers' comp.
Workman's comp is also not taxable. Now, if they are long-term, short-term disability, that is taxable.
Okay.
But if they're strictly on workman's comp, that is not taxable.
Right. And the reason why, you correct me if I'm wrong, workers' comp only pays 66 and two-thirds of the average weekly wage. So you're not getting your full wages.
Exactly.
So I think they're taking into account that you're not paying taxes on it, and so you only get 2/3 of your income.
And in reality, you end up paying a lot more that way than if you had to pay taxes on it. So they already figured it out. So that's why it's not. And again, nothing is free.
That's right. So far in my practice, auto accident settlements or trip and fall accidents are not taxable settlements. Workers' comp checks and a workers' comp lump sum settlement would not be taxable.
They're not taxable.
Now, I also do Social Security disability. What about Social Security disability checks?
Well, Social Security disability is a totally different monster. Social Security disability is same as Social Security, regular Social Security, but it depends a lot of your other income. Let's say, for example, you have no other income. Your only source of income is Social Security disability or Social Security. Then most likely, you will not pay taxes on Social Security income at all.
Right.
But if you are receiving Social Security and then you have let's say $80,000 worth of interest from a bank, or you still are working, or if you have investments, then some of that Social Security income or Social Security disability will be taxed.
Right.
Depending on your other income.
And that's why it's so important. We always tell our clients it's so important that they talk to somebody who understands the tax ramifications. Some people say, I'm going to get a part-time job because I need to, earn a little extra money. Well, that part-time job may push them over the threshold where they would have to then pay taxes. And so in essence, they're working for free.
For free.
That word again.
And I see it a lot where people, but nowadays people cannot just survive by Social Security. They need to go out there and earn some money. But, and again, I tell everybody, if you can go and make $30,000, go make the $30,000 instead of meeting the $14,600 where it's going to be free. So I'll rather pay
some taxes and put more money in my pocket.
Exactly, throughout the year than pay the 10% on Social Security income or Social Security disability.
One of the itemized deductions is a charitable deduction or charitable contribution. Can you explain that to our listeners and what kind of documentation they need, and what type of charity can you donate to and get a tax break?
Well, that's another thing. If you are not itemizing, so basically the charitable contribution you make, you cannot write it off, basically. But for you, in order to be safe, and God forbid an audit, IRS is going to look for canceled checks, bank statements, receipts from the institution where you made the charitable contribution. And I recommend everybody, if you are making it, make it to a 501c3.
Okay.
That is always tax write-off.
All right.
Now, a lot of people are mom and pop. I know somebody that needs $1,000. I'll give it to them as a charitable contribution. I was going to ask you
that question. Yeah.
That's not going to fly. It needs to be 501c3 for the IRS to consider it. Yes, you did make the charitable contribution. That's a tax write-off.
So all those contributions we make to our kids, not a write-off, right?
That's free.
Again, that word. That's right. So yeah, you have to pay taxes on it.
Exactly.
What about college tuition and such like that?
Yes, that's a big thing. College tuition. There is two factors to it. Basically, if you first 4 years, you get what's called American Opportunity Tax Credit, which can be up to, and I always say up to $2,500. Now, for example, you spend $3,000 for tuition, and then you buy equipment that you need for the class, or you buy materials, and that's another $1,000. So let's say you spend $4,000 for the college. First 4 years, you can get up to $2,500 back. Now, after the four years, which would be called lifetime learnings, is 20% of the amount that you pay, meaning up to $10,000.
Okay.
So if you spend $10,000, you get 20% back, which is $2,000. And that's called lifetime. There is no limit to it.
Okay.
But the $2,500, it's only for the first 4 years of college.
And who gets that? Is that the person who makes the payments, or is it the students? So, let's say the parents are the one who's paying for the college.
So I see. Okay, so let's use you as an example.
Yes, because
exactly.
I do pay for Jacob's.
You pay for it. Obviously, Jacob benefits from it. He's probably not even working. In some cases, I'll work it out. Hey, the parent can claim the dependent until he's 24 years old and is a college student. And, let's say he doesn't work, or he works a little bit. And then I'll figure out, hey, if I do Jacob's taxes and I put the school with Jacob, he might end up getting more money than you, man.
Oh, yeah.
But in most cases, the parents have the higher income and they will get the $2,500 full. Now, if you pay for it, Jacob gets the form, not you. So Jacob can go behind your back and do his own taxes and get only $1,000 back versus you getting $1,500 $100 more.
Oh, okay.
And then you also get the exemption of claiming him. So I always tell the parents, make sure you talk to your kids, especially first-year college students. They talk to their friends. Hey, I did my taxes. I got $1,000 back. But your parents left $25 and claiming you even more, possibility of $3,000.
Wow. Yeah.
So you file it as a parent and give him his $1,000, and you still the family. I look at the family adult benefits more.
Right. No, that makes a lot of sense. And again, tax planning, not just tax preparation.
Exactly. And it's a lot more to it than just punching some numbers. A lot of people think punching numbers, that's it, you're out. And it's not that way.
Yeah, no. And that's why it's so important that the family works together throughout or even the business owner works throughout the year, preparing for the time that you have to prepare for the taxes.
Exactly. And staying on top. It's so many things come up, and it changes all the time. New tax laws come, and if you have to stay on top of it. And when a client comes to you and it's asking a question, you don't have time to go, oh, let me Google it. You have to stay on top of it. You have to educate yourself. You have, just like everything else, you have to know what you're doing.
And you study the tax, and I've known you for many years. You study the taxes throughout the whole year.
Well, I started studying taxes, believe it or not, right in high school.
Okay.
I started working with a guy named called Steve Miskin, and he is the one that put this in me. And even when I have nothing to do, I'll find something to read about taxes.
Now, I believe that with Amsed, because I've known him since he was just a young lad. And your father was is a wonderful man, a very hardworking man. And your brothers, I mean, you are all success stories, and so it's amazing that you came from Bosnia in the middle of the war.
Exactly.
You fled war, and you guys have really succeeded. You're the American dream kind of stuff.
Well, we all live in the American dream, and I always, every night I go to bed, I thank my parents for giving us this opportunity and bringing us to this best country in the world. A lot of people that were born here, they live here, they take it for granted. They don't appreciate this country. I mean, this country has given us everything, and I would die for it.
Yeah.
I mean, and so my brothers, I have 3 other brothers. So there's 4 of us. We all have our own businesses. We are going out there. We're trying to do the right thing. Because my parents moved here, believe it or not, with $50 in their pocket.
I remember your dad told me that so long ago. Yeah.
So, and you got to give back to the community. We all stay active in the community, try to help everybody out. And
I mean, you're active in not that there's really a difference, but the Bosnian community, but you're also very active in the American community as well.
I love this country. I consider myself American, and anybody I can help, I am more than glad to. And I'm learning from Matt. I mean, my family has known Matt. Matter of fact, when I first met Matt, my English was like, okay, I knew how to say yes, no, Coca-Cola and stuff like that. But he helped my family out, and he helped so many people that I know, and, almost brings tears to me when I even talk, Matt, it means just too much to my family.
Thank you. Your family's good people. And I always say I really enjoy helping good people. And unfortunately, I meet a lot of good people after bad things happen to them. And so meeting your family and helping your family, I think I helped all your brothers at one time.
Everybody almost that I know you helped.
And it's just a joy because they're just good people. But if you guys have questions, we do have about 6 minutes left. Ansed is here. I am here as well. We're able to tackle any questions you have. April 15th is not too far away. And so this is the time to be looking at it and thinking about what you need to do in order to prepare to file your taxes.
Well, when you're saying that to prepare, I tell everybody, file your taxes. A lot of people are concerned, oh my God, I cannot make the payment. I'm not going to file taxes. No, don't. File your taxes. That's the main thing. And then if you don't have the money, we'll make a payment plan. We'll make some kind of arrangements. Because if you don't file on time, then you're going to get the interest. You're going to get penalties. And then it's just going to get out of hand. And then 1 year is going to lead to another year and another year. And then you're going to be like, oh my God, what do? I have this 300-pound monkey on my back. I just cannot. File your taxes on time. If you don't have money to pay, We'll work something out. We'll make a payment plan. But do yourself a favor. Don't procrastinate. Get it done on time.
That is so important, and we hear it too many times. I mean, even clients that I represent, we ask them for their income tax and say, well, I haven't filed in many years. Why not? He goes, well, because I got behind on 1 year and it just was afraid to file it the second year. So I didn't file it. That's just a spiral.
Exactly. And that's what I see. Most people, they come to me miserable because they haven't filed taxes in years. And I'm like, why? Most of the time, you are probably going to break even, you're going to owe money, or you're going to get something back. But if you owe, let's figure out, what do you owe? We'll get a payment plan, but you're going to avoid penalties and interest potentially.
And they just keep adding up.
And they keep adding up. And believe me, IRS will get their money one way or another.
Right.
They'll find a way.
Yeah. We see a lot of people getting income or generating income like through eBay. I'm probably dating myself, but eBay or Facebook marketplace. Is that income something that they need to report on their income taxes if they're buying and selling items?
Any amount of money is taxable and needs to be reported. Now, a lot of people, I'm not going to report it. You report it, but then there's so many write-offs you can have. Let's say, for example, if you have a small business, like
a flower shop.
Yeah. You can write off things like, for example, you can write off your rent, you can write off your car expenses, you can write off your advertising, marketing, you can write off the taxes if you own the place or depreciation, you can write off your phone, internet. There's so much to write off. Where don't be scared and say, oh my God, I sold or made $50,000. I will have to pay taxes on the whole 50. No, you will pay taxes only on the money after all the expenses. And believe me, that's why tax professionals come in handy, because we have all these questions to ask you. Where did you spend money? And again, I'm going back to what I said. Keep your bank statements, keep your credit card statements, keep your receipts, go back to it, track. You're only going to pay taxes on the money that you basically net. So if you sell 50, but you have 40 expenses, you're only going to pay taxes on the 10. And that's it.
There's so much more information that you need to ask them about that. And we're about wrapping up the show. But so why don't you tell our listeners how they can reach you when you're not here on FLA Law on the radio?
Well, my firm is 2062 Northeast Coachman Road. And phone number is 727-577-2020. Or they can go on the website www.taxesbysmeco. And there you'll find everything. You'll find about my company, what we do, how we do it, and right up from pricing.
Beautiful picture of your wife and your girls as well. So, Emsa, thank you very much. You are a friend, but you are so knowledgeable too in this tax area. So thank you for taking the time to be a guest on FLA Law on the radio. I will see you soon, and I'm sure our listeners will be reaching out to you as well.
Thank you for inviting me, and this means really a lot because I'm sure you had a list of people, but for you to invite me means really a lot to me.
Thank you. Thank you. And thank you, everybody, for listening to FLA Law on the radio. We will be back next week. Jacqueline Bryant will be hosting the shows for February, so I'll be back in March. In the meantime, drive safely and watch out for those who don't. Take care.